I'd like to introduce Brian Caprice from Keep Trading Simple to talk about trading energy products around economic reports. Brian, it is all you.
Great, thank you. I appreciate it, Todd. So I guess let me first welcome everybody. Typically, I do things more on the end of the day. Today we ended up putting me down, I guess, in the first slot to again just kind of mix things up, see how you guys like it with me being in the front versus the back. So today's a pretty interesting talk. It's kind of almost I would like to say a series. Like I don't know if any of you guys out there have ever done a series of education where you have like the initial and then there's like kind of follow-ups. This is kind of a combination of two. It's kind of a series. We did an education summit last September, I believe it was. Feels like 2 months ago, but it was last year, and we did the first kind of or at least I did the first kind of presentation on trading the oil markets. And actually back then it was oil and gold. Where we are with the pandemic back then was much different than where we are now. And there's a lot of questions that were unanswered and a lot of projections worldwide. And really, if you think about it, there has been absolutely so much movement in the oil markets from then till now. It's just kind of crazy, and it's going to be interesting. But I wanted to add one thing as far as the series goes. If you guys attend the sessions in the morning, when I say the morning, the sessions that Todd and I put on YouTube, we broadcast live every morning. We talk about oil a lot, and one of the things that we talk about every week is the oil inventory reports as well as natural gas. The strategy that I talk about, I'm going to give you the rules today. So I know a lot of people come here and they're not sure what the title is, and maybe Todd and I should have titled it something a little bit differently, but it's kind of like that series. I'm going to give you all the rules to a full strategy. And then at the end of the day, you guys know that I'd love to give stuff away. I'm going to give you guys something to help you even, get into it a little bit even more. All right. So with that said, let me dive into our talk today. This is kind of like number 2 in the series, trading oil markets. We've dropped the gold piece of this for this one. And it's basically trading oil markets around specific economic reports, as well as the strategy I'm going to give you guys. Guess what? It works for natural gas as well, and it works for pretty much most news releases out there, particularly not only in commodities, but also in the currency market. So kind of like an added bonus that if you get good at this news, kind of pre-release news strategy, you can use it in a lot more things than just the oil markets. But I wanted to focus on oil today. So with that said, let's see. I got to figure out how to do my click. There we go. Whoops, not that on this one. Oh, it's going all the way backwards. So we're going to go all the way through the slide deck. Let's see, go back to number 2. Right, there we go. So obviously, because we're going to talk about risk, we're going to talk about charts, and we're going to talk about potential trading, we need to make sure that we cover risk disclaimers. This is one you've seen many times before. And again, I'm not really going to read all through this. You guys have seen it. I'll read through the Nadex one. But basically, no representation is being made that the use of this strategy or any strategy or trading methodology will generate profits. Past performance is not necessarily indicative of future results, and only risk capital should be used to trade. You guys have heard that in the past. Basically, don't use the don't use the milk money to to trade the markets. Here's the Nadex risk disclaimer: that trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost of the transaction, including fees. The information presented within this presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instruments on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And again, that's what we're talking about today. And Nadex is a registered trademark of the IG Group. All right, so first things first, we're going to talk about the global recovery. If we're talking about commodities and really any news in general, obviously, all we hear about nonstop is what Delta's doing, what the spread is doing. Now things have kind of switched over to tapering and raising interest rates. And again, climate change is another one of those things that get thrown in here. It's interesting that climate change is such a, again, it was on the president, the president's kind of speech today about how we're at an inflection point. We need to focus on this when we've been in lockdown for a year and people haven't been driving the same way that they used to. But magically, this was the year that it kicked in. So again, it's a global problem, right? So we'll talk about the global recovery as far as oil and demand in general. And what we'll do is we'll cover, again, I'll talk about oil demand. We're going to talk about inventory reports, why it's such a great trading opportunity. And again, show you some kind of like the world outlooks. Remember, there's inventory reports every single week. So there's a lot of opportunity out there to be able to trade this market. And again, as I said, it's not just oil, it's also natural gas and it's also pretty much the way that the market functions with news. So you can use this strategy in the currency department as well. And then I'm going to give it to you. I'm going to give you guys the pre-news release strategy. I'm going to kind of break it down, and we're going to talk about the charts you need for the analysis. It may surprise you guys a little bit, but we're going to dive into that and kind of go through the rules. I'm going to show you an example. I'm going to show you how last Wednesday the strategy was used, and it's been like 7-8 weeks in a row. But I'll show you last Wednesday, the 15th, exactly how it worked. 2 weeks before that, you could also do the same thing. I think actually the charts I have, I think, are from 2 weeks ago, and then I have last week in there as well, so you can kind of see. And then we'll talk about the Nadex products that you use to trade it. Again, Nadex is just a vehicle for the actual underlying asset, but we'll dive into kind of the pros and cons of if you use binaries for it, or if you use call spreads for it, or again, even knockouts potentially, depending on if certain conditions are met. So with that, let's just jump into things. So obviously, global recovery, big thing. So if you guys attended the session last year, this was actually a slide that I used last year. You can see at the bottom, it says the source is the World Economic Outlook from the International Monetary Fund, right? The I guess publication that they send out every single year, or that they publish every single year. This is, this time last year, we really had no idea. I mean, we didn't know how long COVID was going to last. There was no vaccines, so it was a very, very much different world. And we talked about really what recovery was going to look like. And the reason why it was so important is because, again, when you're trading things like oil on a weekly basis, so much of it is driven off of demand. If people want something, the price goes up. And again, as traders, that's what we're taking advantage of, particularly with Nadex products, because remember, Nadex is not like a wealth-based tool. It's not something that you're holding on to for 6 months or a year. They're all short-term, expirations. The longest is a week. So, looking at these on a yearly basis is kind of like, But what happens on a yearly basis filters down onto a weekly basis, because it goes back to show you that, again, a lot of these forecasts, they don't have crystal balls. They're not right a lot of the times. And, example being right now, I mean, the global economy in 2020, remember this time last year, we were going to have a drop in growth of minus 4.9%. And this year, 2021, we were supposed to be up 5.4, right? And you can see the advanced economies and the emerging markets and developing were losing not as much of us and gaining a little bit more than us. But go towards, now go into this year and look to where we're at. It looks a little bit different, right? Now they're saying that 2020 was only a loss of 3.2, and this year it's 6. If we go back, you guys can see, what was it before? Supposed to be a minus 4.9 on the global economy and a 5.4. Wow, we were a little bit too negative last year, and not kind of strong enough. So did they paint a picture that was much more worse than was what the reality was? And the answer is yes, right? So what does that do for us as traders? Again, on a global spectrum, this is the World Economic Outlook for the International Monetary Fund. These guys are not even right in the forecast. And again, look at the advanced economies and the developing. Very much different between these two. Now, looking at kind of the growth projections. Okay, now why is growth important? Here's first and foremost why growth is important. Okay, we watched oil. If you guys remember last year when oil actually went to zero, I don't know if you guys remember that, right? Oil actually went to zero, right? Because there's no one willing to take the contracts. Oil prices are driven by demand, okay? As demand increases, oil prices go up. Now, it is absolutely, and I'm not trying to pull the wool over anybody's eyes here, but oil is absolutely a manipulated market. There are organizations that control supply that are for-profit organizations. So their first interest is to make money. But something like economic growth projections, while not necessarily aligned with oil, extremely important for trading things like oil and natural gas and gold and silver, right? All these commodities out there. So, in looking at this, again, this was August of last year that this data was actually put into one of these slides. And you can see that, the United States was supposed to lose, minus 8% as far as growth goes and only gain 4.8. And then again, look on the right-hand side, you can see things like China, right? China is absolutely a world player, particularly in growth, right? Well, in 2020, they were only supposed to gain 1, right? And this year, they're supposed to gain 8.2. Well, here's the reality of it. This is what just came out this year. Last year, it was 3.5 and 7. And China is, where they were supposed to only make 1, they made 2.3. So the demand destruction was not there as bad as we thought. So, you know, what's interesting about this and looking at this on a macro level is we can see oil prices right now around $70, right? There was a time, you know, within the last year where prices of oil really dropped really, really low. Okay. And again, it was because, oh my God, everything is so bad. The world's going to shut down. It's going to be this. But the reality was a lot of the negativity was overblown, and the growth this year is better than expected. And what are we hearing on a global spectrum right now, right? I mean, the EU is not going to really kind of start their tapering / raising processes till next year, 2022. The United States is like, yeah, we'll taper this year, probably. We'll start tapering later this year, but we're not going to raise interest rates for another 2 years, right? Look at these growth projections of where we are. We didn't lose as much as we thought, and we gained a whole lot back. In some cases, you know, again, the United States was, yeah, we're losing 3.5, but then we're gaining 7 back again. And next year, it's supposed to be another 5. So, you know, we are holding back a lot of this, you know, and yet what are we hearing is everything's back to normal. So I don't even think we're in the kind of the over hot phase yet. And prices are back up to where they were before. The difference is now inflation, right? Everybody is used to paying $3. I mean, I say $3 because I live on the East Coast, but $3 gas is not really like a big deal. You make it like $2.99. I'm like, yeah, it's a deal. It's under $3, right? I know some of our friends out in California are paying in the high fours, you know, $4.75, right? And again, if you pay that for an entire year, you're pretty much used to it at that point. There's no reason for it to go backwards. So again, it's justifying the prices of oil going higher. Now, what are we trading with that? Why is that important, Brian? Great question. It's important because the higher the price of oil is, the more volatility can be substantiated by the market. If it's only $10, yeah, you'll get percentage moves, but it's not a lot on a dollar basis, right? I mean, you get a 10% move that move $1, right? If it's $100, $1 move is nothing. And as a trader, I'm taking advantage of that. So the higher the price is $60, $70, $80, you know, for oil, it gives the ability to get more trades in, particularly in the Nadex realm. Okay, so again, very much different outlook. And again, I'll push it back again. Here's last year. If you guys want to look at this, you know, you look at the, you know, 2020 was supposed to be a -4 and then a 5.4. And then again, you can see that it was a -3.2. So not quite as negative as they thought, right? By almost 2 percentage points. And then the growth of 5.4 versus now it's supposed to be 2021, 6. So again, the negativity takes over so much. And that's very, very important to understand, not just in oil, not just in gold, not just in interest rates and retail sales and things like that. Negativity is always a more powerful emotion in trading, and you should look for it. And again, that's why kind of our presentation today is talking about how do you take advantage of this negativity, right? There's absolutely a way, and that's what pre-market news releases are really all about, okay? Now, here are the inventory reports that we need to know. Okay, one of them actually comes out later on today. Okay, there are 2 different reports as far as oil goes. One of them is called the API, or the American Petroleum Institute. Okay, now it typically comes out the day before the release. Now, this is a normal week, and I'll explain what a normal week means in a second. In a normal week, it basically comes out at the end of the trading day, okay, in the afternoon after the market is closed. Now, the API, it's an interesting report, and you may say, well, it comes out the day before. That would be awesome. That's probably like the real trader, right? And the answer is no, okay? While it all sounds great on paper, the API report is an industry group report, okay? Their claims, and it says here in the last, you can see API claims that the monthly estimates are within 1% of each other about 81% of the time. It's like, you know, I'm right all the time, 50% of the time, right? Or I'm 100% right, 50, you know, one of those things, right? I forget what the saying is, but you guys get what I'm saying. So API is the industry saying how much the industry has. But, I say but, at the end of the day, does the industry have, do they have an interest in what that number is and what it does to the effect of oil? And the answer is yeah, they are, right? If they are wrong and if their numbers are not exactly what the, you know, the official inventory reports are, there's no recourse whatsoever. So because they are an interested party, much like OPEC, and again, I'll explain what OPEC is in a second, OPEC can say whatever the heck they want. And if they lie or kind of tweak the numbers in a weird way, there's no recourse for them whatsoever. And the API report kind of comes in the same way. Now, the actual oil inventory report, the official one stamped, is the EIA number. Now, this is an official report. So there is no tweak in this one. If, it says down here, unlike the API, the EIA does no active lobbying for policy change whatsoever. They are purely a reading. So when we talk about the oil inventory report, what we're doing is we're talking about this EIA report, Okay, now typically it comes out on Wednesdays. Well, it doesn't always come out on Wednesdays because sometimes it comes out on Thursdays or sometimes it comes out on Fridays. And again, that is because of holidays. Okay, here's an example. It's easy to find. You can see that this one goes out until October. It's very, very easy to find another one on their website. They update it typically like, once a year, probably this gets updated with holidays. But basically the way that you can find this is you can go over to DailyFX and you can go to the economic calendar and you can find it directly on there if it's going to be on Wednesday or Thursday. You can go to Forex Factor, do the same thing. Oil tends to be considered an orange or a medium impact release, and it shows up every week at 10:30 in the morning Eastern time. Natural gas, the same exact way. And remember, the strategy I'm going to give you guys in a couple minutes also works for other news releases on there. So if you're already looking at the calendar, hint, hint, go find red news releases, high impact news releases, and do the same exact thing I'm going to show you guys in about 30 minutes, or not 30 minutes, about 10 minutes, right? So there's where your oil inventory reports are. Now, here are the organizations. So not only do the reports give us the inventory, and inventory is important because remember, oil is a supply and demand. The first part of that statement is supply, okay? Is supply. That's that top piece here. OPEC is basically, and again, you can see it. It was formed in 1960 by Middle Eastern countries. Iran, Iraq, Kuwait, Saudi Arabia, and then Venezuela gets thrown into that lump as well. I know that they are not over there, but basically they have had I would say the control of the oil markets for a very, very long time, okay? We mentioned that they are manipulated. This is the organization that does a lot of the, price, I would say, they were designed to standardize prices, but at the end of the day, they make billions and billions of dollars over that. And there's no checks and balances system for them. Over the recent years, as technology has increased and we're finding oil in more places, OPEC doesn't have as much power as they used to. Okay. And when I say used to, like, 70s, 80s, 90s, even the beginning of the 90s, what they said went, and literally they could rise the price up, down, left, right, sideways, anything they wanted to do happened. But then other nations started to get tired of it, like the United States. Now we produce a ton of oil as well. After that, again, in January 2017, we have this kind of number 2. Now it's called OPEC Plus. If you've ever heard anybody talk about OPEC Plus, okay? OPEC Plus is the original OPEC members, but then they added additional oil-rich nations because, again, it was kind of like, well, why is just the Middle East the people that are deciding this, right? There should be other nations too because there's more oil than just the Middle East, right? Now, is it still predominantly controlled by OPEC? Yeah, but it's other nations out there. Russia is now included in that group because Russia has a bunch of oil there. So there are other nations in there. Now, it's kind of like the problem with OPEC Plus. Like we've been talking about oil cuts, right? In the last year, right? We've been talking about oil cuts and production and increasing supply and things like that. That's OPEC Plus. And there's some issues with the way that they were formed that has to be a unanimous decision. But, again, if there's 13 nations in a room together, I mean, look at it this way. If you pick 13 random politicians and put them in a room and tell them to create something that 100% of them agree with, unless it's like unlimited vacation and a raise, you're never going to get agreement, right? With 13 politicians. Well, guess what? In the OPEC meeting, it's very, very difficult. At the end of the day, they all care about making money. But again, as soon as somebody kind of gets a leg up, that's where everything kind of falls through. And that's what we've kind of seen recently. We saw it in August with, supply increases. A lot of the bigger nations that are a little bit farther ahead in their COVID recovery efforts said, absolutely, let's start increasing. Demand is going higher. We're seeing it everywhere. We need to start producing more supply to make more money because they're seeing that $70 price tag and say, wait a second, I can do the math. How many millions of barrels do we produce? What's the price of oil? Okay, put that on the calculator. How much money are we losing every single day? That's the way that they're looking at it. And the smaller nations that are not quite where the larger nations are, we're like, no, we got to keep prices high because they don't produce as much, so they're not losing as much, right? So kind of some bantering. This provides a lot of trading opportunity for us. So much when they go back and forth. And again, whenever there's a big release, kind of like, interesting enough, when Biden canceled the pipeline, OPEC had an emergency meeting the next day to make some statements. Again, to kind of get that control back again. What does that do for us? Gives us a ton of trading opportunity, particularly in the short term. Okay. So This is a slide from last year again. The top producers, and this surprises a lot of people. When people look at this, they're like, wait a second, why the heck? Wait, the United States is up there with 1 million, barrels per day. Are you 12 point? Are you crazy? What? Really? Is this real? Yeah. It surprises a lot of people. Now you can see again, Saudi Arabia, Iraq are both sitting in there. China's over there with a little amount. Iran, Brazil, Kuwait. There's a lot of people up there, but you see the United States, Russia, Saudi Arabia, right? You can see what their global share is. And again, the change is actually the change of demand from the prior year, right? It's more of a consumption aspect of it. So the biggest thing is if you look at this and say, wow, 2019, the United States probably had a lot of control, and we did, right? We had a lot of control over oil inventory, oil pricing, oil policy, right? Well, jumping ahead now, and you can see that a little bit has changed. Yeah, we're producing more, right? Kind of interesting, right? We went from 12 up to 17. We have 19% now, and nobody looks at the United States as being an oil producer. Everybody knows we love our cars, right? We are definitely an oil user, but you can see in 2020, the change in demand, and it shows it up there. It says the change reflects a the change in consumption in 2019. It shows you that our consumption is already starting to go down. It's already dropping, but yet China's is increasing. And this is why China is such an important, kind of piece in the puzzle. All right. So, a lot of people will say, well, why are you looking at China data? Why does China data matter? Well, China data matters because they are now the driving force, and they don't even drive cars as much as we do, but their consumption is starting to increase. So that's where a lot of the future of oil prices and increases is all coming from. The United States may not want oil anymore, but guess what? China will absolutely take all the oil that they can get. And that's kind of why we're talking about today and strategy and how much inventory control is important. Now, I mentioned it before. Oil prices are strictly, it's from two people, right? The producers control how much they give us. The consumers control how much we are using. If producers make the price go too high, consumers say, I'm not interested in driving. I will stay at home. I will work from home. I will take public transportation. I will buy a Tesla. It's basically what it goes back to. And again, in all honesty, I probably should add another component here. Yes, they are producers and they control supply. Producers have been able to kind of hold back the next step. And again, for a while it was hydrogen cars, but now I guess it's going to be jumping right to electric cars, right? I should throw like Tesla's logo up here, right? Tesla could control this too, because again, if they made their cars a lot cheaper, right? Then again, people will say, wait a second, I could get this electric car. Maybe I want to do that instead because oil prices and gas prices are a little crazy. They go all over the place, right? So again, it is supply and demand driven. Supply, you're going to see things like retail sales that drive it. The other side of it is going to be the inventory reports, and that's really what we're here to talk about. So big question is, when can we trade oil? Okay, the strategy I'm going to give you today is a pre-oil inventory, a really pre-news release strategy. But the 3 times that you can trade oil, one is session open. And again, session open, every morning we talk about it. You guys hear the little big or the big little or the big big. Those are all kind of talking about the movement in the markets based off of session opens. Pre-releases obviously requires news or some type of, and I say news, I don't mean like something that wasn't expected. I mean an economic news report that everybody knows for months and months and months where it's at. And then retracement is, okay, the news came out, the market didn't expect it. It's that, oh my God movement, right? It's that, oh my God moment where the price literally just explodes and goes higher or lower. How do you take advantage of that when everybody's late getting in? That's another way to do it. And that'll be probably, we've talked about the retracement strategies before, but today it's going to be pre-release. All right. So when we talk about the 2 session opens, again, depending on where you live, these are going to be different times. This is just one of the, there are many websites out there that have this. This actually came from Forex Factory, the session, timer. And again, this was taken at New York time, and it tells you what the time is in all the different sessions and how they label out. So the 2 big sessions we really need to worry about when we're trading. And again, what I'm telling you today works absolutely. Again, UK session, don't hesitate to use this for news releases, right? The UK session is a very, very, very big market. Okay, it's kind of when the world considers the more. It's kind of like in the United States, there's kind of like a battle of 2 cities, right? New York is really kind of where our market is considered open. Chicago believes it's an hour later in Chicago. It's not, it's New York, but it's kind of the same idea where London is the first one, and then we have the US Open. So a lot of things happen in the UK session. There's a battle. If you've watched the morning sessions, we've talked about the V's going up and down. This is what really session open oil trading is all about. Okay. The reason I'm telling you is because the same news strategy I'm talking right now and kind of the principles, could you, instead of just using like the 30 minutes before the news comes out, could you use the London session versus the US session? You could do that too, right? But this is what it is. It's London traders versus US session based traders. There's a lot of movement. Typically it's in one direction in one session, and a lot of times it's a reversal in the other direction. If you don't believe me, go down to a 30-minute chart and go look at your UK session versus your US session, or attend the morning sessions. I talk about it all the time. Okay. So I would say that this sets us up for the next piece of it. But this is one of the best times to trade oil, is the session transfer between these two. And again, it is basically two rams banging heads a lot of times. As far as pre-release goes, okay, kind of taking a step back for a second. We've talked about this, when the releases are going to be. They're every single week. They're on a Thursday. They're at 10:30 in the morning. If they get bumped, then it goes to 11 o'clock on Thursdays. Sometimes, again, randomly it goes to a Friday. Here is the history of what we have seen. It's the 21st right now. I didn't update it last week because I already had the slide built. Right, I could have updated it because last week, trust me, last week it wasn't on either. But you'll see it on a lot of these sites. And again, this is Forex Factory. DailyFX does the same exact thing. Every single week, they're giving you a forecasted amount of what they believe the oil inventory report is. The left category over here is the actual. So based off of what you see here with all the reds and the greens, how accurate do you think their forecasting is? The answer is not very accurate. Okay. That is the trading opportunity that I'm looking. So what happens here is the forecast is what the market believes is going to be. And again, it's not just oil inventory, everything. The forecast is what they expected. It's the expected amount. So the market is really, have you guys ever heard the price is already in? Right? A lot of times like, yeah, the price is already in. Yeah, the market has a perceived notion of what the release is going to be, and it is already adjusted there before the news is released, right? Well, when there's a big surprise, like let's see, one of these bigger ones in here, something like down here, June 16th, right? The expectation is we were going to have a little bit of a downdraw in supply, right? 2 million barrels is not that much, right? Well, the reality is we were 7.5 down. That was a huge miss. There was huge movement off of that. And the question is, and again, when you're looking at your trading, you got to think about, am I stacking all the odds in my favor? Right? Well, we already know, looking at this, what is the percentage of time that they are, dead on accurate, right? It's typically once, maybe twice a year. So we already know that this news release is going to carry a certain level of risk because, again, the forecast is not there. I've made jokes about it before. There's like a little primate, like one of those little like snow monkeys with a little dartboard, right? That's like throwing things like, let's see, inventory today is going to be, all right, -4, right? That's how accurate they are. I mean, there are some releases that every single time it's like almost dead on, right? They got it. I mean, it's right there. Oil is not one of them. Okay. So this is why I constantly tell people you should absolutely trade this, right? But again, I tell you to do it in a safe way. A safe way meaning you're controlling risk, or you have a product that helps you control risk, again, i.e. Nadex, right? Particularly those binary options. So it's very, very easy to find. You know when they're going to be. You can set a timer every single week. You can go right there. So again, is this a strategy that you can use on a regular basis? Yes, every single week you can trade this one. It doesn't take a vacation, right? So it's a strategy you can trade every single week. Number 2, let's talk about what you need to do. And you guys will see, I said watch the tape, right? This is kind of like the secret. Like a lot of people are so focused to what an indicator says that is lagging behind, that takes a while. And again, if you guys have ever watched me, you guys know that I'm a price action trader. I am looking at candles and candle formations, and I'm an if this then that trader. I am not a, what does it say? Okay, let's go long. What does it say? I mean, I'm not a red light, green light type guy, right? That's just not me. Some people love that. It's not me. I like to have a plan before these things happen. So the important piece here is we need to have everything set up. And at the end of the day, I don't really care what the release is. I don't care what the number is. All I care about is what the chart tells me should happen beforehand. Now, does it work all the time? Absolutely not. I mean, anybody that tells you that their strategy works 100% of the time is lying to you, right? Losses are fine. They're going to happen. It's about controlling the risk inside those losses. And again, looking at this, stacking the odds about how often they're right versus wrong, there is movement, right? It's finding the movement. And this is one of those things that I found personally with news. The reason why I like this one is sometimes you'll see a great number and the price goes down. guess what? 9 times out of 10, this one is grabbing those things out there, right? All right, so this is what we need. Okay, if you guys don't already have a pen out, or you guys can screenshot things, you're more than welcome to. You can request this from Todd if you want, or contact me. This is what you need. So first things first, we need to focus on charting. Okay, start off in a 30-minute time frame. If you want to change these and tweak these, go ahead. You can do it if you want. I find that these are the 3 best time frames you need to focus on. I am not under any delusions as an educator. I've been doing this long enough. If I give you guys a strategy, you will probably tweak it and try to make it your own no matter what anyway, by adding the secret sauce or the special sauce. My company is called Keep Trading Simple. When people add things, they end up making it overly complicated and end up messing it up. So if you guys like simple, here's the simple rules. Go into a 30-minute chart and find strong areas of supply and demand. If you don't know what supply and demand is, again, you need to attend our morning sessions. I talk about it all the time. If you guys want advanced courses on it, please contact me and I'll help you guys and teach you guys what supply and demand is. But you should be able to find levels where you have basing, strong movement, extended range candles, that kind of stuff. Again, there are other ways. You don't have to just use supply and demand. You could use, fibs is another thing that I've shown as well. But you need to find areas of buyers and sellers on a 30-minute level. The reason why it's 30 because it gives you a good idea of what's happening in the overnight session. Once you have those levels, you need to take it to step number 2. You need to drop it down to a 5-minute chart. In the 5-minute chart, this is an area where you're going to refine your levels of buyers and sellers. And when I say refine, I'll show you in a second. But typically, the larger the time frame you lose in all of, that you use in your charting, it's a very, very big area. We don't want to take that much risk. I mean, we're talking about, tiny moves. And we're going to go down to the 1-minute chart here in a second. Am I going to use a zone that was formed on the daily? Not when I can refine it and make it better. And by refining a zone, we're able to lower the risk, get a better entry point in there, okay? That's why we drop it down to the lower time frames. We're not doing the analysis there. And again, we do a little bit. We can find some revision there, but it's more of a confirmation tool based off the 30. And it's the same thing. If you guys attend my sessions during the day or any of my students out there, they know that my personal favorite 2 time frames to do my analysis on are the 30-minute and the 4-hour. Okay, because of the news and we know when it's at, I'm using the 5-minute and the 30 here. Now, after you've refined your zone, you've made them smaller, you're tweaking them, you're making them a little bit better, increasing the odds, right? Then what you do is you go down to the 1-minute chart. Okay, some people look at the 1-minute chart and they're like, oh my God, it's all over the place. It's moving. What do I do with this? I want you to go there because you need to find what I call price stalling or price freezing. Okay, you can't see it on, I can see it on a 5, but I always go down to a 1 to confirm it. If you're new with charts, it's something you gotta find on the 1 minute. Now, another question before anybody asks this one, okay? You can do absolutely 100% of this 30-minute, 5-minute, 1-minute. Everything that you need to do, you can do inside of the Nadex platform. You do not need any external charting software. You guys know in the mornings I use TradingView a lot because, again, being web-based is very, very easy. You don't need it. Not for this. You can absolutely use it. And again, I actually almost recommend that you do use the Nadex platform for it. Again, takes a little while to get used to. All platforms are the same. You kind of got to get the bells and the quirks out of the way. But the reason why it wouldn't be bad to use it there is because, remember, Nadex indicative values don't always match external charting sources. The candles should look the same, but the prices may be a little bit different, right? I don't know if you guys have seen that before. I find that Nadex indicative values tend to be a little bit higher, right, than what they say on my charts. And that's fine. The candles are the same. And again, you just want to make sure that you're picking the right strikes based off of what you see in Nadex charts, not on an external source that may have a little bit different data that has, it's pulling a different data source than the indicative value source, right? So 35 and 1. So what it looks like, and this is what we're doing on each one. I've kind of talked about it. The 30, and again, 30 minutes before a release, I should have put at least 30 minutes before, have those supply and demand areas clearly marked to save time, because you don't want to kind of at the last minute get in there and be like, try to do everything all at one time. Like, I can do it that way, but I've been doing it for years. If you're new to this strategy, do it ahead of time. Now, could you even use 30-minute levels on setup the night before? Yeah, you could, right? You could find those levels well in advance and then just, get the most recent ones when you log in, but do it 30 minutes beforehand. 5 to 20 minutes before is where you're really looking for those fresh levels, those levels of basing and that refinement, and you're doing that on the 5-minute chart. Now, the reason why I say wait to, get down to that 5-minute to 20-minute is because, you guys know, if you're looking at a 5-minute chart or a 1 minute, if you're doing this with a 1 minute, there's 30 candles within a 30-minute, it gets to be a lot. So within 5 to 20 minutes is really kind of where that sweet spot comes in. If you already have your levels on there, they could be from the night before, 2 hours before, 4 hours before, it doesn't matter. Now you're diving in and kind of checking last minute. Okay, can I refine it? Can I look? Was there any hidden basing levels that are forming in here? Is there any big explosions? That's where you find that about 5 to 20 minutes before the actual news release. So between, I say at 5 to 20, I would say, I don't know, typically by like 10, between 10 and 10:15 would be an ideal time to look at this. So, if you did your homework ahead of time and you got your 30s up, yeah, you could log in at 10:15 and start pulling the strategy if you really wanted to. And again, kind of like 15 minutes worth of trading, right? And then between that 1 and 10 minute mark, right before, and again, this is our execution time frame. So we've kind of done our homework, we've done our revision, lowering our risk, looking for new things. And then between 1 and 10 minutes before news, that's where we're really going to look for some stabilization in price, or freezing or stalling in price. Okay. And what we're looking for price to almost kind of just stop. And that's why I said stalling or freezing. If you don't drive a car, you don't know what stalling is like, but like freezing, right? Price is like halted. It'll stay there for like 3 candles, 4 candles. A lot of times it's like, wait, what happened? Like, you're like hitting the gauge, like, oh my God, did the gauge break? Why is price not moving? This is kind of where the key is. This is where all the strategy is coming in. So this is why it's important. If you don't do number 1 and do your homework, and your number 2 revision isn't there, number 3 is very, very hard to do. You just can't jump ahead to number 3. Like, you can't, it's very hard to do the strategy. Your results are not going to be as good if you jump from number 1 to number 3 and think number 2 is not important. It's kind of one of those things. If there's 3 steps and you do 2 of them, you're only doing 66% of the work. That's where the real secret sauce is, doing the homework ahead of time and then being ready to pull that trigger and being decisive about it. So number 3 is important. And this is what it looks like, right? Step 1, get on that 30-minute, right? Now, if you've ever attended one of my sessions before, I say it all the time. A chart is a chart is a chart is a chart, right? It says oil right now. This could say retail sales. It could say PPI. It could say unemployment. It could say interest rate change. It could say monetary policy statement. It could say all kinds of things, right? It doesn't matter. I could trade oil. I could trade the dollar. I could trade the yen. It's just we need a news release, right? But for the purposes of today, this is the oil inventory report. 30 minutes ahead of time, I go and find this zone. Now, this zone actually was formed, and I don't know if you guys can see. Do me a favor, type it into chat if you guys can see the blue cursor. I think you can, but I'm not 100% positive. I believe you can. If so, you can see that this is a level that was actually formed at about 8 o'clock in the morning. So it was about 2.5 hours, right? 2.5, actually a little bit more than that, about 3 hours before the news release. So when I did my morning session, I was able to actually locate and find this zone. And this is a great supply zone. A lot of sellers in there, right? I love this one. Great green candle top, 1 candle base, strong push out of it. Love it. It's at 7 o'clock in the morning. You look at it and go, why did that move? Don't care, right? Don't care. I just know that's a great level of sellers. I love it. I've marked it off. And what do you do? Step number 2. And again, step number 2 happens between, I'd say ideally the 10 to 20 mark before the news release. You jump down to the next time frame. And now what we're doing, this is what I mean by refining your zone, okay? What I'm doing is I took that bigger zone, and on that larger time frame, I should have probably put it here, but if you can see it, this green level of basing, this red level would have been a little bit farther down in that zone. And I didn't need to take that much risk, right? Remember, the smaller you make your risk levels, the less risk you're taking. The bigger it is, if I did the whole green candle, it's a lot more risk before I'm willing to admit that I'm wrong, okay? So what we did here is we took that 30-minute level, I went back to it, and you can see, look, it's been a decent amount of time there. On the previous one, you're like, oh my God, look, it stayed there for it was quick, right? 30 minutes. It's one blip, right? That's what it actually looked like on a 5-minute chart. And again, had you been watching that early, it's like watching paint dry, right? Like watching paint dry. But what you did is, again, we refined it. We made the zone smaller, and then it becomes a waiting game. And again, we know the release is here. I said, 10 to 20 minutes beforehand. Well, let's see. That's about 4 candles ahead, right? Here's the news release, 1, 2, 3, 4. Okay, price was 40 cents lower. It was sitting right down here. So again, was it at that level? No. Was I ready to pull the trigger yet? No, but I knew that the zone was there, so I can start looking at contracts and making sure the risk is good. Okay. Well, what happened is every 5-minute interval, it started to pop, it started to pop, and it started to pop. Remember, once I refine my level, then I can kind of take it down. And again, is the trade ready? Am I getting short right now? Absolutely not. It's not in the level. The news release is not here. Those are my 2 triggers, hitting the zone and the news release. So what do? We go down to 1. Okay. When I talked about freezing or stabilizing, right, or stalling, they're all exactly the same thing. You see how price is moving around? It's going up, impulse correction. I mean, all this time it's moving, it goes down, it comes up, it grinds low, or kind of bases sideways. You see how it kind of came up and then just kind of stopped, right? It was up, it was down, it kind of stopped, up, down, up, down, up, down. That's what I'm talking about. This is what I mean by we are now approaching, 5 to 10 minutes, like 1 to 10 minutes before. Count these back. This is the 1 minute chart, right? The red line, this line right here is the news release, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's been stalling for 10 minutes. I said you need to have a minimum of 3. It's stalling on an area of sellers at a news release time. What was the end result? There was the immediate push. It came back and retested and continued to fall away the rest of the day. Okay. Does it matter what the news release is? Really not so much. Here is last week, Wednesday, September 15th. The forecast was minus 3.6 reduction in inventory, right? The price, what did it do? The price came in at 6.4. Okay. Here is the 1 minute chart. When I go back, here is the level of stabilization. Here was the stalling. I'm like, okay, there's a level there, right? There's a level there. And actually, there's a little level of stabilizing right here where I'm like, okay, it's stabilizing. Price, and again, the news release came out right here on the green candle, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we were getting that stabilization. So it's an area where we'd be willing to buy, right? Look, there it stopped. We knew it had a level below. It's close, right? You could have taken it, right? And then price rallied about 5 minutes beforehand. And what did it do? 5 minutes before news came out, it started pushing lower and started pushing lower and started pushing lower. And the candle right before was sitting in that area. So now we're thinking, gotta find some binaries on this one. And what did it do right at news? It popped right into that level of stabilization, that zone we marked off from the 30 and the 5 minute, and boom, popped right higher. Now, I don't know if you guys know what oil did after this. And again, this is kind of beyond today. Oil popped, and again, as it should have. By the time you would have been able to say, oh my God, it went long, I gotta go, it's good, right? It already was high. This was actually the turning point at $72.90. So everybody out there and their brother sees this 6.4. Oh my God, the inventory is down so much more. Oil is going to the moon. Well, this red dotted line up here is actually a larger time frame area of sellers, right? Yeah. That is an area where, and actually, I may actually be able to pull this up real fast for you. I can show you guys. That was an area. So did we want to hold this long term? Did we want to use, I don't know, a weekly contract on this one? Nah, not really. And the reason why is because I knew I had a higher level of sellers up there, right? I knew I had a higher level of sellers. And actually, let's see, right there we go. I'm going to drag this in. If you guys can see a chart popping in, please let me know. Here is the news release. Right? Here's the 15th. You can see it at the bottom. There's a 15-minute chart. You can see 10:30 is right there. Look at the bottom, 10:30. This was a higher level news. So at the end of the day, here's the release right here. It popped in. Did I keep it long? No. Why would I? It's an area where I've seen sellers in the past, even though it was awesome. But again, for the news trade, did it serve my purposes? Absolutely. It dropped down. It gave me an immediate pop. I didn't hold it long term because, again, I knew I had the opposing side. And all of a sudden, that became the retracement in there. Right? So do you see how this is kind of one of those things that, yeah, there. And again, I can put them side by side if you want to see it, right? There's your side by side. I don't need this. Let's get rid of this. Let's get rid of this. There's your 15th. There's your 5 minute right there. Go back to the 15th right there. There's your 5 minute. There's your 5 minute. There's your 1 minute. So do you guys see how it lays out? And again, this was last week, right? This was last week. So again, just to review it again. And again, here's the retracement. Here's the last step. Go up to here. These are the 3 things you need. 35, 1, right? Strong levels of supply and demand. Refine it on the 5 minute. Look for price stalling and freezing inside of one of those 2 levels. Again, here's your time frame. 30 minutes, at least 30 minutes before. Have those levels clearly marked. Can you leave them on your charts forever? Sure, I don't care. Absolutely. Do your homework the night before. 5 to 20 minutes before. See if there's any fresh levels of basing, which again, we saw on there. And 1 to 10 minutes before, look for where price has stalled, right? 30 minutes before we find it, 5 minutes before we refine, right? 1 minute before we take, here's the freeze, we take the drop. Here's the real live example when we take it from here. And again, your 5 minute, your 1 minute, your stabilization, and your drop. And again, overall, even though this was a negative number, meaning it was positive for gold, or I'm sorry, positive for oil, price continued to drop, okay? Now, if you catch things like this, and again, there is higher time frame zones, that's where the next kind of step of this comes in, is the retracement. We've talked about retracements before. If you guys have ever watched any of the parabolic retracement webinars, this basically what happened with this one is price was driven by oil up into a level. Retail traders saw that negative number and said, I'm buying oil today. And what happened is all it did was retrace back down again, because again, at the end of the day, the technical analysis, the buyers and sellers matter more than what the news says. The news is a tool that, again, is important. It's important to have, but it's really just meant to kind of manipulate people out there as the market adjusts and doesn't adjust. Okay, there's a lot behind the scenes that goes on with that one. But again, that's the strategy. All right, now I said what products do you use for it? So obviously, binary options are great. Why? Because you have that limited risk. You know, your risk on any single binary trade is basically the cost of what it is to get into the trade plus the dollar per contract, right? You can't lose any more. No matter what happens, if it goes $100 in the other direction, you can only lose maximum whatever you put into the trade. Binary options are great for session open and also pre-release trades. Now, I like the shorter duration contracts. I like the 2-hour binaries personally myself because they have a smaller strike width, okay? What does that mean? It's the difference in price between one binary to the one right higher, okay? Again, I'm the big retracement trader. I don't like the long ones because a lot of times it goes straight up in the air and then it turns over and rolls right back down to where the start was. Again, the entire strategy on that one. That's what happens with those longer duration contracts. So binaries are absolutely great. 2-hour, anybody that's heard me talk, 2-hour binaries are my absolute favorite. I think that they could make them a little bit better, right? I think they control the width a little bit more. These absolutely work. Use the shorter duration contracts for them, okay? If you're not versed with any of the three, I would say that binaries are probably the best thing to use. I would also use something a little bit farther out of the money. I'm a big believer in taking binaries off early, right? There's no reason to, you know, if you get into a 2-hour binary contract and you pick a strike and it goes past your strike and then you watch it for the next hour and a half or hour, go past and go back below again and turn you into a losing trade, you know why I don't like to leave them on until expiration. Now, are there times? Yeah, I'll leave them on until expiration sometimes, but I'm a big believer in taking something a little bit farther out of the money. The reason why is because it gives me lower risk. If I can take something like $15 or $20 worth of risk in a trade, meaning if it goes against me, I lose that plus the contract price. But if it goes all the way beyond and now it's all of a sudden selling and I could sell it back for 60, if I could buy it for 20 and sell it for 60, is that good a rate of return? Yeah. So again, Nadex products, binaries. Number 2, call spreads. So there are shorter duration contracts for call spreads. Call spreads, you can use them really for anything, session open, pre-release, and retracement. The nice thing about a call spread is, unlike a binary, we're not so focused on an actual, yes, Todd, I see the clock. I am so focused on basically like kind of where it is, right? I like call spreads and I like knockouts. The problem with the knockouts is sometimes around news, there's some whipsawing back and forth and it pops up and down, right? And that can be a problem. Call spreads are a way to kind of alleviate that. So again, you can use it for session open, pre-release, and retracement. Particularly it's at the ceiling or the floor. Those are ideal for these products. And again, using the shorter duration call spread is one of the ways to get around that. So if you're comfortable with that, I like these two, and it doesn't have the problem of having to pick a strike for it to close past. As long as it's below the ceiling and the floor, it has a cash value at expiration. A little bit different, a little bit of a benefit. And then Nadex, knockouts you could use. I like knockouts more for session open or early week-based trading. You can use them pre-release, but I mentioned that you got to be careful because of that whipsawing back and forth. It can cause some problems. But I do like them for retracements, particularly when the ceiling and the floor is just past the supply and demand zone. And again, I use higher time frame time zones for that. If you have questions, you can email me about that. All right, so with that said, I always like to give you guys a parting gift. I do talk quick. Again, being first, that's, you get a little bit less time. But I wanted to leave you guys with this, and this is, I love quotes because I always feel like it makes people take a step back and think. Okay, show me a successful individual, and I'll show you someone that had a real positive influence in his or her life. I don't care what they do for a living. If you do it well, I'm sure there was someone cheering you on and showing you a way, a mentor. And every single professional out there, almost every single motivational speaker, everyone that is the best of the best of what they do, they always talk about how important mentoring is. Every one of these sessions, guys, I always try to give you a golden nugget, something that you can take with you. I know you guys watch the recordings. People have questions and people email me. And a mentor in my life, as far as trading and just in general, was extremely important to me. And it's something that I do for my students. And again, at this point, I've been helping you guys long enough. I feel like you guys are all my students as well, and I wanted to offer it out today. Okay. I have never done this before. I don't even know if it's something I'll do again. We'll see how it goes. I'm basically donating my time to the people that attend these sessions. Okay. I charge students for this all the time. I'm willing to give you guys, as a special giveaway, a 30-minute mentoring session. You guys can use the link that Todd posted out there. If you're watching this later and you can't see what Todd's posting in the chat, you can screenshot and go to this Bitly link. Bitly is basically just a way to make it smaller so you don't have to type all the other stuff out there. And it's, bit.ly/KTS mentor. We can talk about charting, how to set up your charts, time frames. We can talk about managing risk exposure using, Nadex products to find yourself ideal places to enter positions. We can talk about your strategies, about what you're doing right now and how we could potentially make them better. We can talk about market psychology. It's an open book, whatever you guys like, we can talk about. And you have 30 minutes of my time that we can do it. Again, it's something that I've never done this before. I've been doing this for a long time with Nadex. I have my students do mentoring all the time and they love it. If you guys want to take advantage of it, you're more than welcome to. There's no selling or anything like that. It's literally just let's talk about whatever you want. And again, the conversation will go from there. So we'll see. Maybe it's great. Maybe it's not. This is the first time and I don't know. We'll see if I ever do this again for this group. There's a bunch of people. So yeah, I needed a website to be able to kind of book people on a calendar. So it's first come, first serve. So whenever you guys want to do it, you do it. So with that said, that's the end of my time for today, guys. If you have a question, you can message me or again, obviously send messages to Todd as well.
Yeah, that is actually a very generous offer, Brian. And that is really slick that you're doing that. I did drop that link into the chat. And again, it's a first come, first served.